Welcome back. In this section, we're going to dedicate all of these lessons to helping you understand the details behind how a statement of cash flows is created. And as you'll soon see, you really only need two ingredients to create a statement of cash flows under the indirect method: your balance sheet and your profit and loss. And it's through collecting the information from your profit and loss and the net changes in your balance sheet that we'll be able to get our cash flows. So let's now go over a really basic example to understand the psychology behind cash flows. Let's assume that we had no balance sheet activity at all. What would happen anytime that we record revenue, say for $50,000? Well, as I record $50,000 in revenue, the cash impact is an increase by $50,000. If there's no impact on my balance sheet other than retained earnings, that means our cash should go up by that same amount. And every time that I record, let's say, a cost of goods sold, in this case for $10,000, how would that impact our cash? Well, this is an expense. And absent of any other activity, that would cause our actual cash to then go down by $10,000. The same is true if I record an operating expense for, let's say, another $10,000. Once again, we'll have a decrease to our cash flows of $10,000. So in this example, because our net income is $30,000, our cash, absent of any balance sheet activity, is going to cause an increase of $30,000 as well. But let's now think about the impact on the actual balance sheet. So in this example, we're showcasing how we had $50,000 in revenue. Well, what if we really only received $25,000 of that amount? How would our balance sheet be impacted? Well, that would mean instead of receiving the full $50,000, we only received $20,000 in cash, and the remaining $20,000 went to another asset called accounts receivable. So watch what happens when I increase this by $25,000. You'll see that my actual cash decreases by $25,000. The cash impacts will go down by $25,000. The idea is that if I receive any asset other than cash, that'll have a negative impact on my cash flows. The opposite is true for liabilities and owner's equity. So for example, let's say I want to take out a loan for $100,000. Well, that means that if my liabilities go up by $100,000, that means that my cash will also go up by $100,000. Now, similarly, we mentioned that I had $10,000 in operating expenses. Well, what if I didn't pay those operating expenses all in this month? In fact, what if I'm going to pay them all next month? That means that my current liabilities or accounts payable would go up by $10,000. So in this example, instead of trading in my cash for the expense, I'm trading in an IOU, the accounts payable, which causes our actual cash flows to go up by $10,000. Now, it doesn't actually cause our cash flows to go up, but it causes our statement of cash flows to show an increase in that account by $10,000. And the same is true for capital stock. If, let's say, an investor is going to put $50,000 into my business, well, that means that my capital stock account will go up, causing my cash to go up. So understanding the psychology is going to be really important as we get more into depth with building our three-statement model. And to summarize, anytime an asset goes up, that means instead of receiving cash, I received another asset, which causes a negative cash impact on my statement of cash flows. Anytime liabilities and owner's equity goes up, that means instead of paying cash, I instead paid with an IOU. Or perhaps I received money by instead giving an IOU, just like in our example with someone taking out debt or owner's equity. If I then repay that debt, well, that means that my debt balance will go down, which means that instead I paid cash. My liability went down and my cash went down. The same is true for an equity account. If you return capital to an investor, well, that means that your cash will actually go down. Now let's go over the details behind the math of how a statement of cash flows is actually presented. But first, I want to challenge you to recreate this over here in our next video.